Welcome back, everyone, to Stock Talk.
Great to be here.
Today, we're diving straight into Coinbase's Q1 2025 financials. We've got their latest report right here.
Yep, lots to unpack. It's not just numbers. It gives you a real sense of their strategy.
Exactly. It's packed with info, financial figures, strategic moves. We're going to pull out the critical insights for you.
Sounds good.
And hey, if you find this valuable as we go, please do hit like, subscribe, share it out, maybe leave a comment. It genuinely helps us keep doing these deep dives.
It really does. All right, so Q1 2025.
Okay, so the headline seems to be, well, strong overall performance, right? Even with some economic headwinds.
That's the gist of it. Total revenue hit $2 billion.
$2 billion. And adjusted EBITDA was, what, $930 million?
$930 million, yeah. Which, considering the broader uncertainty, that's quite solid.
So what's the immediate takeaway from those top-line numbers? Just resilience?
I think resilience is a good word. It suggests their core operations are fundamentally pretty healthy. They can still generate significant earnings.
And that adjusted EBITDA figure, earnings before interest, taxes, depreciation, amortization, that's a key one for operational profit.
Exactly. It strips out some of the accounting and financing noise. So yeah, it paints a picture of a pretty resilient business right now.
Okay, now, digging into that $2 billion revenue, transaction revenue was the bulk of it, $1.3 billion.
That's still the biggest piece, yes.
But, and this is interesting, that's actually down 19% from the previous quarter.
Right, and that's where it gets nuanced.
So what's going on underneath? What are the shifts causing that dip?
Well, what's fascinating here is sort of the evolution of how they're making that transaction money.
Okay.
The decrease seems largely down to two things. One, growth in derivatives trading.
Which often has rebates, right?
Right.
To attract volume.
Precisely. Rebates eat into the net revenue figure. And second, there's a noticeable shift in spot trading volume. More of it's moving towards market makers and liquidity providers.
The institutional side, generally lower fees there?
Typically, yes. They operate on tighter margins. So even if overall activity is strong, the revenue per trade is changing. It's a mix shift.
Right, so it's not necessarily that people stop trading, but who is trading and what they're trading is changing.
Exactly.
And interestingly, despite that dip, their spot volume only fell 10%, but the global market decrease was 13%.
That's a key point. It suggests they actually outperformed the market slightly, maybe gained a bit of share there.
So relative strength even in a shrinking segment for that quarter. What about consumer versus institutional volumes?
Looking at the specifics, consumer volume was $78 billion, down 17%.
Okay.
Institutional volume was $315 billion, down only 9%.
So institutions held up better in terms of volume?
Volume, yes. But here's the kicker. Institutional transaction revenue fell much more sharply, down 30%.
30%. Wow. So that really highlights that move towards lower fee institutional activity you mentioned.
It really underscores it. That segment is becoming huge for them in volume, but the revenue dynamics are different.
Okay, let's pivot then. Subscription and services revenue, that was the other side of the coin. An all-time high, right?
All-time high, yeah. $698 million.
Yeah.
Up 9% quarter over quarter.
So while transaction revenue dipped, this segment grew nicely. What's the engine behind that growth?
The main driver, overwhelmingly, was stablecoin revenue. It jumped 32% to $298 million.
$300 million almost, just from stablecoins, mostly USDC, I assume.
Primarily USDC, yes. That highlights just how important its utility is becoming within their ecosystem.
They also mentioned growth in Coinbase One subscribers.
They did, yeah. Didn't break out the specifics, but mentioned traction, probably helped by adding more benefits. But really, the big story within this segment is USDC's expansion.
Absolutely. I mean, that $60 billion market cap milestone for USDC is huge.
Massive.
And the average amount held in Coinbase products surged 49% to $12 billion.
$12 billion of USDC held on average. And they said monthly transacting users doubled, average balance per holder tripled over 2 years.
Those are really compelling metrics. What does that tell us strategically?
Well, connecting the dots, it really suggests USDC is becoming a cornerstone. It's way beyond just being a trading pair facilitator now.
Right. It fuels that subscription revenue directly.
And it positions them for, potentially much broader stablecoin use cases down the line. Payments, DeFi integration, especially with that Circle partnership being indefinitely renewable.
Okay, let's talk costs, expenses. Total operating expenses were up 7% to $1.3 billion. What drove that increase?
The report points mainly to higher variable expenses, things tied to that increased market maker activity we talked about.
Okay, makes sense. More activity, more related costs.
Right. And also they mentioned some losses on their own crypto asset holdings, so market dynamics impacting their balance sheet assets too.
Got it. And profitability net income was $66 million.
66 million on a GAAP basis, yeah.
But they also introduced a new metric, adjusted net income, which was way higher at $527 million.
That's right. It's pretty common companies using adjusted metrics.
To show core performance, they'd argue.
That's the idea. They exclude certain things, maybe non-recurring items, non-cash charges, stock-based compensation, that kind of thing that can, distort the standard GAAP picture.
So that big difference suggests there were some significant exclusions affecting the bottom line number.
Likely, yeah. It suggests the underlying operational profitability, as they see it, was quite a bit stronger than the standard net income figure shows.
Okay, shifting gears slightly, the balance sheet. They highlighted having $11.5 billion in cash, equivalents, short-term investments, and restricted cash.
That's a very strong cash position.
What kind of flexibility does that war chest give them?
Oh, substantial flexibility. It means they can fund strategic moves like acquisitions.
Which we'll get to.
Exactly. They can weather market downturns more easily, invest in growth, maybe even think about returning capital to shareholders eventually.
Yeah.
It's a sign of, well, financial health and lots of optionality.
Okay, let's dive into those strategic moves. The big headline grabber, acquiring Deribit.
Huge news.
$2.9 billion. That's $700 million in cash plus 11 million shares. That's a bold move. What's the thinking?
Look, it's a very strategic play. Deribit is massive in crypto derivatives, especially outside the U.S.
Right.
Buying them instantly positions Coinbase as arguably the #1 global crypto derivatives platform by open interest.
Wow, #1 globally just like that?
Pretty much. It massively accelerates their international roadmap.
Yeah.
Deribit already did, what, $1 trillion in trading volume last year? $30 billion in open interest, mostly non-U.S.
So it gives them immediate dominant scale internationally in derivatives?
Exactly. And Deribit was already profitable, positive adjusted EBITDA, so it should add to the bottom line too.
And for traders, what's the practical benefit? Having spot, futures, options all under one roof?
Well, that's the goal. A unified platform, it means potentially greater capital efficiency. For traders, you can manage your portfolio more easily, cross-margin potentially.
Use your spot holdings to back futures positions, that sort of thing.
Potentially, yeah. And just access to a wider range of tools on one platform. It lets you implement more sophisticated strategies, hedge risk, speculate, whatever your goal, more efficiently.
Makes sense. Okay, we've touched on USDC already, but its growth clearly remains a key strategic pillar. That market cap, the revenue contribution.
Yeah, it's clearly fundamental. It's not just an asset. It's becoming, foundational to their whole ecosystem, driving subscriptions, enabling new services.
Like payments, maybe?
Exactly. And DeFi integrations.
And speaking of global reach, they also got new registrations Argentina and India.
Right. VASP registration in Argentina, FIU registration in India.
What's the significance of those markets specifically? Just growth potential?
Pretty much. These are seen as fast-growing markets for crypto adoption. Getting the right regulatory licenses is crucial to operate legally and build trust there. It's part of that broader international push.
Another interesting initiative, Bitcoin-backed USDC borrowing on Base.
Yeah, their Layer 2 network.
They said $160 million in loans already issued. Seems like strong demand. What does this tell us about their, maybe, DeFi ambitions?
It shows there's definitely an appetite for these kinds of DeFi-like services among their users. Letting people borrow against their Bitcoin without selling it, that's a common need.
Taps into the hodler mentality.
Right, and it builds more utility onto the Base network itself, making it a more active ecosystem.
And they also made a couple of acquisitions for Base, specifically Spindle and Ironfish.
Yeah, Spindle for on-chain advertising and attribution.
So helping projects on Base get discovered.
Essentially, yeah. Helping measure marketing effectiveness on-chain. And Ironfish is focused on private transactions.
Adding privacy features to Base.
That seems to be the goal, yeah. Broadening its appeal, potentially. It all points to a strategy of making Base a more useful and attractive platform for developers and users, building out the ecosystem.
Okay, let's zoom in quickly on the different business segments. We covered consumer, institutional, USDC. What about global derivatives and the Base ecosystem performance, specifically in Q1?
Well, for global derivatives, the big highlight was gaining market share in perpetual futures perps on their international exchange. Over 60% increase, they said.
60% market share increase. That's huge.
Yeah, showing they can really compete in that space. They also launched Portfolio Margin 2.0 for institutional clients.
More capital efficiency again.
Exactly. more flexibility for complex strategies. And for Base, we mentioned the borrowing, but also stablecoin balances on Base grew to $4 billion.
4 billion, up 12% quarter over quarter, mostly
Yeah.
USDC driving that.
Largely USDC, yeah. Shows growing adoption of Base for holding and using stablecoins.
And they also talked about developing stablecoin payments, B2B payments specifically, pilot in Q2.
Right. That's potentially a very interesting new avenue, moving beyond just trading infrastructure.
Using stablecoins for actual business transactions, cross-border payments maybe?
That could be a huge area. Streamlining things, reducing costs for businesses. If they can leverage their infrastructure and trust there, it could be significant.
Definitely one to watch. Okay, shifting to regulation. They sounded pretty positive, highlighting several developments.
Yeah, they listed a few things. A new executive order related to digital assets and Bitcoin reserves,
Okay.
progress on bipartisan stablecoin, and market structure bills in Congress.
Always seems like progress, but maybe it's getting closer.
Maybe.
Yeah.
And crucially, the dismissal of that big SEC lawsuit against Coinbase itself.
Right, that was a major one.
And ongoing work with the CFTC, possibly towards allowing perpetual futures trading in the U.S. eventually.
How significant are these steps, particularly that SEC lawsuit dismissal?
Oh, the dismissal was huge, a major win for Coinbase, obviously, but also seen as a win for the broader industry. It provided some clarity, pushed back against the SEC's approach.
They really framed it as protecting customer rights in the industry's future, didn't they?
They did. You can tell they view it as a landmark victory against, well, what they saw as regulatory overreach.
Oh.
Definitely boosts confidence.
And the legislative progress, while slow, is also positive for long-term clarity.
Absolutely. A clear, supportive regulatory framework in the U.S. would be a massive catalyst for more institutional adoption and innovation.
Okay, looking ahead, Q2 2025 guidance. What did they tell us to expect?
Well, for April, transaction revenue was about $240 million. They noted spot volume was down month over month, roughly in line with the global market trend again.
So maybe a softer start to Q2 on the transaction side?
Potentially, yeah.
Yeah.
They also flagged they're continuing to invest in growing derivatives, planning trading incentives.
The rebates and things.
Right. Expecting that to impact revenue by maybe $30–40 million in Q2.
Okay. What about subscription and services?
They guided for $600–680 million for Q2, so potentially a bit lower than Q1's record high.
Why the dip there if stablecoins are still growing?
They mentioned stablecoin growth being offset by potential headwinds from lower ETH and SOL prices impacting staking revenue, for instance.
Ah, okay. So puts and takes within that segment and expenses.
They gave ranges. Tech and development plus general and admin expected between $700–750 million.
Right.
And sales and marketing between $215–315 million. So continued investment in growth and the platform.
Did they express much caution overall?
They did acknowledge the ongoing macro uncertainty. Global economics could still impact trading volumes, asset prices, the usual caveats.
Standard cautious optimism?
Pretty much.
Yeah.
Reiterate confidence in the long-term roadmap, financial discipline, that sort of thing. And they expect the Deribit deal to close by year-end.
Which should help profitability and revenue diversity once it's integrated.
That's the plan, yes. A positive impact expected eventually.
Okay, finally, they briefly touched on risks and opportunities. We've covered most opportunities: Deribit, stablecoin payments, regulation, international on-chain lending. What were the key risks they flagged?
Well, the big ones are pretty consistent. That macro uncertainty we just mentioned, crypto price volatility is always a factor.
And naturally.
Competition is heating up, obviously. Regulatory uncertainty, especially as they expand internationally, different rules everywhere.
Yeah, that's complex.
And, integration risk, bringing a big acquisition like Deribit into the fold smoothly always has challenges.
Okay, so if we were to summarize Coinbase's Q1, what are the absolute key strengths right now, and what are their main focus areas going forward?
Key strengths. I'd say strong Q1 financials. Despite the environment, that record subscription and services revenue really powered by USDC.
Definitely.
The huge strategic potential of the Deribit acquisition, that very robust balance sheet, giving them flexibility, and their ability to seem to gain market share in key trading areas.
In focus areas for the rest of the year.
Seems to be navigating that macro uncertainty carefully. Balancing growth investments with financial discipline, always tricky.
Right.
Successfully integrating Deribit, that's going to be critical. Continuing the international push, and really developing those B2B stablecoin payment solutions. That seems like a big potential unlock for them.
Okay, a really comprehensive look there at Coinbase's quarter. Definitely a lot going on, a lot for investors and users to digest.
Indeed. It really prompts an interesting question for you, thinking bigger picture. As this regulatory landscape hopefully gets clearer, maybe, and you see players like Coinbase really pushing into derivatives, institutional services, payments, how do you see this fundamentally shaping, I guess, the future of crypto markets? And maybe even how they interact with the traditional financial system? It's evolving fast.
That's a great thought to leave people with, a lot to watch in the coming quarters. Thanks for diving deep into the Coinbase report with us today. We hope you found this analysis insightful.